to us about that stimulus package. Will that be enough to support the economy? Will that be enough to help the SMEs in Malaysia?
Well, it's certainly welcome. I mean, there are lots of direct cash transfers mentioned in the stimulus package, which is really what's needed because it's getting assistance to people as soon as possible and to the right people. So those are totally welcome. I look at things from SMEs because MIDF, one of the things we do is to provide government funding and to SMEs and help them grow. And what we've seen is that while some SMEs have done well, in fact, are doing reasonably well, those involved in manufacturing. Obviously, some others are in not such good shape. So someone involved in tourism or food and beverage or restaurants is rather badly hit. Services in general are rather badly hit. So more aid for them would be welcome. Yeah.
Charan, when you take a look at the Malaysian benchmark, it is among the worst performers in the world this year. I mean, could investors be missing out on opportunities in the Malaysian market right now? What's looking attractive, you think?
Everything's looking attractive. I mean, I know things aren't looking well for Malaysia at the moment. I mean, the number of cases has come high, but I think the whole vaccination program is doing well. I mean, I've got
to us about that stimulus package. Will that be enough to support the economy? Will that be enough to help the SMEs in Malaysia?
Well, it's certainly welcome. I mean, there are lots of direct cash transfers mentioned in the stimulus package, which is really what's needed because it's getting assistance to people as soon as possible and to the right people. So those are totally welcome. I look at things from SMEs because MIDF, one of the things we do is to provide government funding and to SMEs and help them grow. And what we've seen is that while some SMEs have done well, in fact, are doing reasonably well, those involved in manufacturing. Obviously, some others are in not such good shape. So someone involved in tourism or food and beverage or restaurants is rather badly hit. Services in general are rather badly hit. So more aid for them would be welcome. Yeah.
Charan, when you take a look at the Malaysian benchmark, it is among the worst performers in the world this year. I mean, could investors be missing out on opportunities in the Malaysian market right now? What's looking attractive, you think?
Everything's looking attractive. I mean, I know things aren't looking well for Malaysia at the moment. I mean, the number of cases has come high, but I think the whole vaccination program is doing well. I mean, I've got my first jab, and as that rolls out and more people get vaccinated, we're all hoping that there will be some return back to normalcy. We will never get back to normality this year, I don't think, but there will be some return to normalcy, and all the services industries can start opening up again, because it is hard. It is hard if you run a restaurant or a small business where you depend on customers coming into your shop. It's incredibly hard for you to do anything now.
Yeah, absolutely, Sharon. This is a great tragedy, is it not? You look over the border to Thailand and they're having a really tough time of it. I mean, are you feeling that things are better in Malaysia now? Things improving? Is the worst over with?
We were hoping it was the case, but obviously the recent uptick in the number of cases is bad, and we're all glad the government's trying to do something about bringing the numbers down again. And vaccination really is the only long-term solution to this. But it's really a two-speed economy in the country, and just like everywhere else in the world, I think. So those involved in manufacturing, particularly those involved in exports, are doing not so badly. In fact, some people are doing rather well. On the other hand, many people are very, very badly hit indeed, and that's the odd thing about this virus. Not everybody is affected the same way.
This is it, and you look at the various asset classes and you see this big push towards environment, social and governance, ESG investing. Now, we've had a former head of the world's biggest pension fund in Japan talk about this creating a bubble. A guest earlier on, Sarah Lien, saying that she did not believe that that was the case, saying that actually it was a move into quality because ESG represented quality and quality was generally overcrowded. What are your thoughts on this, particularly when you look at the Malaysian market?
Well, as a firm, we're fully vested in ESG. I mean, ran the first green conference amongst the banks a few years ago, and we've been promoting many environmentally friendly products. For example, we finance hydro, run-of-the-river hydroelectricity. That's not using massive dams to destroy environment. These are hydro run-of-the-river hydro. Well, you just use the natural fall of the water to power the turbines. So we've been funding those. We've been funding solar plants and green buildings. So we're a firm believer in it. And in fact, we just had a conference last week on ESG investing, and we're launching a fund devoted to ESG investing in Malaysia. And the response is very good. Now, I don't think it's bubble. I mean, obviously, there is the risk of some people using this as greenwashing, but I do think that this is a trend which is here to stay.
Charan, I want to take a look at retail investors. There's been a surge, all wanting to ride this I guess, the rally in equities, and you're launching a platform to allow Malaysian investors to buy into the U.S. market. Yes,
we are, but it's still beta. It's supposed to be top secret, but it is available on the App Store and on the Play Store if you look very, very hard for it. And we are testing it, and we hope. And there you are. So you can download it now and test it. Tell us what you think. But yes, we are, because there's been a resurgence in retail. Now, for a long time, people in Malaysia thought retail was the days of retail were over, the glory days of retail from the 1990s were over. But that's not true at all. The pandemic, I think, made lots of people start looking at taking control of their own savings, taking control of their own finances, and the internet, and made everything possible again. And so people are really investing in the stock market. So what we've done is, because we don't have much of a retail business other than serving a few high net worth clients. So what we have done, though, is find a niche, what we think is a niche, which is Malaysians who want to invest in US equities. And we're going to make it very, very easy for them. You can open your account online. You can move ringgit easily to a ringgit account here, and we'll handle all the forex for you. And we'll just make it easy to invest in all the names you're talking about. For example, Facebook, which is up 30% this year. I didn't know. So yeah, that will going to open opportunities for that to every Malaysian. And it is only for Malaysians, I'm afraid.
Two things before we let you go. The SPAC bandwagon, do you see Malaysian companies jumping on that bandwagon? And what do you make of the cryptocurrency space? Do you see perhaps Malaysia allowing more of that to happen? What's the outlook for regulation?
On SPACs, yes. I mean, there are some Malaysian link companies who have been who are listing or going to be listed through a SPAC vehicle in the US, and I wish them all the best. Malaysian SPACs were very popular some years ago. They're less in fashion now, but I'm sure the time will return. But certainly for a large global or regional Malaysian business, listing through a SPAC, listed in the US or even Europe seems to be the way forward. As for crypto, Malaysia does have a licensed crypto exchange through the SC, and but we MIDF, for example, we don't offer crypto to our customers, and I think some people do. I read an interesting survey the other day which said most serious fund managers don't invest in crypto for their firms, but on a personal level, 40% do invest in crypto. So there we are. I think what one does for one's institution and what one does for oneself can be different themselves, can be different sometimes. But crypto is one of those examples where there's been a lot of wealth creation in all over the world, and in Malaysia as well. So some people indeed have done very well out of the crypto, but it's not something we are putting at the forefront for our clients now.
Assalamualaikum and salam sejahtera. Good morning, ladies and gentlemen, members of the media, distinguished guests. My name is Khairi Sharin Arif bin Baki, and I'm the head of digitalization at MIDF. I'm deeply honored to have been given the chance to be your moderator for today's special event. Today's mark a significant milestone for us at MIDF. We would like to thank all of you for your presence here today to witness the launching ceremony of MIDF's latest product, MIDF Invest. Ladies and gentlemen, we have an exciting program lined up today in conjunction with the product's launch. To kick off the agenda, we have organized an interesting webinar, Investing in US Stocks. And without further ado, allow me to introduce our two panelists for today. Encik Taufiq Iskandar, CIO of Penjana Kapital. Ms. Kathlyn Toh, founder of Beyond Insights. I would like to introduce our first guest, Mr. Taufiq Iskandar, who is currently the CIO of Penjana Kapital. And I hope it's not too late to congratulate you, Taufiq, on the new role.
Thank you very much, Khairi. Thank you very much, MIDF team, for this opportunity to speak today. Thank you very much.
All right. I mean, a bit of introduction. Previously, Mr. Taufiq was the CEO of VCAM Asset Management. Taufiq started his career with Pemodalan Nasional Berhad, PNB, in the International Investment Department. He was also part of the Co-op's Pioneer International team, and until recently, Taufiq held the post as a head of research and previously head of equity at Co-op, which covers both international and local investment. Taufiq also spent 5 years in Co-op's London office, managing Co-op's global investment. And welcome and thank you for making time for us today, Taufiq. Our next speaker, Ms. Kathlyn Toh, an experienced speaker and a well-known trainer amongst the local traders. She has 30 years of experience investing in stocks. She has actively trading in US stocks, options, CFDs, currencies, commodities, futures, and she has experienced the full cycle of the bull run, the market crash, and the high volatility markets, which gave her experience in dealing with any types of market condition. She founded Beyond Insights in 2008 to share her passion in stock market, and since then, Beyond Insights has won multiple awards, including the Most Preferred Financial Educator Awards 3 years in a row. Welcome to both of you. Okay, let's start with the topic of us today, investing in US stocks. We have seen US market did very well, S&P 500 as benchmark, up 16.5% year to date. And overall, the market has been up by almost 40% since July 2020. It has been an amazing performance for S&P 500 and Nasdaq 100. The question is, can the investors still buy? Kathleen?
Yes, thank you, Khairi, and thank you, MIDF, for inviting me to share this. And this is really my passion. Yeah. So as you know, just to share more about the US market performance, I thought this chart will be a better way to illustrate it. Can you see my screen here? Okay, great. So as you can see, the US stock market since January 2010 has gone up by astounding 670%. And this first one is actually Nasdaq 100. Which represent a huge part of a tech stock performance. And even when we look at the US stock market as a whole, right, it has gone up 279%. Yeah, you can see the SPY representing the ETF for S&P 500. And in contrast to Malaysia is only 19%. And a lot of people ask me about gold, right? Gold is 50%, Hang Seng is 27%, and China has gone down a lot to 10%. Yeah, so a lot of times, especially newbies, they will be very concerned. Since US market has gone up so high, right? When is it going to crash? So from my perspective, the reason it can go up so much is because of the money supply, right? There's a lot of stimulus in the US after the pandemic. And as long as they are not tapering it too soon, it can still go up. Yeah, right now, this year, I mean, the last FOMC meeting, at least there was no mention about reducing the money supply, which is tapering. There was a little bit pull in of the interest rate, but I think the overall tone is still positive. We just need to watch out the next two meetings, right, which is in September and end of the year, to see whether there's any change in tone. But of course, the valuation is high right now. So you need to be more selective, right? It's not the time where you want to go all into the market. You have to be very, very selective on the counters. And The other part is about technology, right? Technology is very high. However, you need to understand what drives the technology, right? The future is in the technology. Just that you have to be selective on the names that the valuation is not overstretched. Yeah. So yeah, Incheck, Taufiq, you want to add on anything to that? Yeah.
Thank you very much, Kathlyn, for this opportunity to add value to your answer. I think, Kyrie and the audience, there are two angles on how you try to address this question, right? First is whether you should buy the US equity market, and second is whether you should buy it now. So as a study, perhaps I will go and address the first part of the question. So investors should have the exposure to the US equity market because of chiefly three reasons. First is availability. Unlike Europe, which is heavy on financial, energy, and to a certain extent industrial, the US market is skewed towards new economy sectors, like Kathlyn mentioned, technology, healthcare, consumer services, and also communication. These four sectors represent roughly about 50% of the market. And the broad opportunity set within those sectors also give investors and traders to ride on secular growth trends, as well as adopt multiple investing strategies. So that's reason number one. If you want to buy, let's say, robotic plays and semiconductors, heavyweights, you will buy Japanese stocks in Asia. If you want to have exposure to AI as well as software leaders, you go and buy Chinese stocks. If you want to buy biotechnology and healthcare companies, you go to Korea. So you have multiple frictions when you want to assess these markets, but you can get exposure to all these secular trends and sectors within one single market, which is US equity. So second part is accessibility. So the market consists of a diverse set of players. You have investors, traders, you have arbitrageurs, and to a certain extent, speculators. No a particular investor dominates market consistently over time. So the diversity gives rise to volatility, which means that you can enter and exit your trading position at ease. And the volume and sheer volume and velocity of the trades means that you can also complete your trades at low transaction costs. So that is also an added value to the equity market. And thirdly is attractiveness of the equity market. As rates are capped near zero, the break-even rate of return for investors is a lot lower than what other markets entail. So that is question number one, or part one of that question. Now, whether you should buy the US equity right now, and a lot of people have been talking about the valuation multiples, and it looks crazy at 30 times. But let me put this in context, right? If you look at modern average historical cyclically adjusted PE for the US market, that roughly about 16 to 19 times. But that takes place when interest rate is between 4 to 6% in 1990s up to early 2000. But now the interest rate or Fed funds rate is close to zero. So if you ask me whether 30% represent excessive complacency, I would think that you have to reevaluate that assessment. So I think there's still opportunity to invest within the US equity market. So over to you, Kyrie. I hope I addressed your question.
Yeah, it's just one point to touch, which Incheck Taufiq talk about, right? Which is in the US market, you can actually trade up and you can trade down, and there's so many ways to hedge, right? You can have put options to protect the downside. So it really depends on the experience of the investor or trader. Yeah, thanks.
All right, great, thank you. Great start to our session here. Kathlyn, if I can add, what would be the key thematic here for US now? Taufiq mentioned quite a number of sectors or industry that we can go into, but what would be your pick?
Oh, my pick? Oh, okay. For me, the key theme is still technology for the future, right? If you want something that's very sustainable, it's just that the valuation is pretty high right now. But there's still some names like if you look at Microsoft, Apple, and Amazon, right? If you look at the valuation, it's not that high. But there are some names that is very high already. I'm not here to give like stock suggestions, right? Because people really need to look at how to time the market. But there are I would say that whenever there's a pullback, all these companies are very robust, right? It actually goes aligned with the future trend where everything that we need, right, is via technology right now. Of course, there are other things that are coming up like genomics, right? There's really in the emerging category. Healthcare is still going to be the future because people need all these vaccine, right? And I don't think it's going to be 1 or 2 doses. It seems like it's going to be like a flu vaccine in the future, right? It's going to be a yearly jab. Right? So I think because of the repeated demand, that's a sector that we can look at. So other than, I think the major risk that we need to look at is all about money supply, right? From, from my experience in the market, money supply is the #1 thing, right? Because when you have ample money supply, it just have to go from left pocket or to right pocket. It's about which asset class it goes to. But when the money supply shrink, then some of this money need to be taken out. But I don't think the Federal Reserve is going to be very hasty on that, right? They are very cautious about not causing a market crash. I think they will do it very gradually, right? So every quarterly meeting, right, when they talk about whether they want to raise interest rate and when, it's going to cause some volatility. We just need to look past that, because some of those could be opportunity to buy. And Biden, right, I don't think he wants the economy to go down. So I think he will work together with the Federal Reserve to make sure that they do it very gradually. Yeah, from that perspective, it should not be that alarming. Temporary, every meeting is going to cause some volatility. The other one is the pandemic recovery. Biden is really pushing very aggressively to have at least 90% of people vaccinated, right? At least the second dose. And even right now, people are traveling, and the US airlines are already ordering planes, right? That's a very good sign. It gives them, if they were to order planes, they must have confidence in the recovery. People are traveling. And Biden is pushing very hard on his stimulus, on the infrastructure, EV, having people to have more higher bandwidth. Higher bandwidth will be even better for technology adoption. Yeah. So I think these are the key themes. Then on the other part is the tech war. I don't think his tech war is going to be as aggressive as Donald Trump time, where it will cause a lot of volatility. I like Biden because he doesn't do tweaking so often. Right? Yeah, so it's going to be smoother for the market, but the tension is always there. Yeah, with China on the tech. Yeah, so I'm not sure whether I address what you're asking. Yeah.
Okay, thanks. I think, yeah, I mean, you mentioned tech, you mentioned healthcare, and also you mentioned about, from quarter to quarter, there's different news and then, the different sectors. On this, yeah.
There's actually a lot of key mega trend that we can watch out for, right? 5G is just in the early stage of rollout. And these are called mega trend mainly because when 5G come in, it has a whole chain reaction downstream, right? It will cause a lot of other applications, right? And we have like big data, right? It's not going to go, right? So just number of data that is being collected, and everything goes to software as a service, platform as a service. Even now we have AI as a service, right? So where all this Microsoft, Amazon, Google, they are providing a server where you don't need to have your own server. It's very expensive to deploy an AI environment.
And you can just cloud, right?
Yeah,
cloud computing now. That's correct.
You can just take a fraction of it, right? And cashless payment, I think, is key. Cashless payment, China is going for digital currency. So fintech is going to be very popular. And the other part is majority of people is going to work from home, I think, for extended period. So we need a lot of collaboration, productivity tools. And I don't think that it's just for pandemic. I think it's going to be a norm for the future. So those companies that are providing collaboration, productivity tools is going to be good. And there's a new norm in IoT and edge computing that is coming up.
I totally agree. That's quite a number of sectors actually, or stocks that we can look at.
Yeah.
On this, Taufiq, okay, US market is also about sectorial rotational play.
Mm-hmm.
How would one optimally allocate or deploy their capital on this, Taufiq?
All right, Khairi, I will go deep with my answer here. Yeah?
Sure, no problem.
So investors and traders rotate their capital as they anticipate the next stage of a market and economic cycle. And spotting changes in these cycles is not an easy task, and it's even harder to do it in real time. So the nature of the capital market is that it looks ahead. And this means that the market cycle is usually well ahead of the economic cycle. So therefore, investors and traders are constantly reassessing the market signals, such as yield curve, of which the level and shape of the curve are strongly influenced by interest rate and inflation expectations. So it's difficult to exercise, and it's even more challenging under the new monetary framework adopted in the US under Jerome Powell. It's crucial to look at the dynamics of the policy making at the Federal Reserve when you talk about investing in the US market, either equity or even bond market. We used to be data dependent, and now we move towards outcome-based policy. So the central bank has reiterated that it is willing to tolerate a higher level of inflation, moderately above 2% for sometimes. So when you are outcome-based, like you've seen in Malaysia when we try to address this national recovery plan, you do not course correct as you go along. You wait for the outcome. So, and this takes place when there are structural changes, like Kathlyn has mentioned, going on in the economy. So it is hard for, not just for policymakers, but also for us to forecast with mathematical accuracy. So I would suspect that, yes, US market is all about rotational play, but you wouldn't see as much, as frequent as it used to be, right? And we have also need to emphasize that, you know, last year's economic recession was not caused by cyclical unemployment and deficient demand. It was COVID-induced sudden stop of economic activities that led to rising unemployment. So there is no deficient aggregate demand. So when market reopens, you can see a lot of pent-up demand, and you will see that market will play catch up rather quickly. On the supply side, the COVID accelerated technological and supply chain disruption means no stability in the supply side. And if we have economists on the line, they're pretty sure that the central banks find it difficult to address cost-push inflation. So amid this backdrop, so the Federal Reserve finds it difficult to effectively undertake inflation targeting, but instead it is focusing on its goal of getting more and more Americans get back to work as possible, i.e. full-time employment. More weight is given to the other mandate. So that means they remained bullish. So that's good for risk takers such as you guys. Yeah.
Great, thank you so much, Taufiq, on that. Very in-depth, and yeah. I tend to agree with you on that. Kathlyn, just to move back to you, you have been you've been training so many successful investors out there. You know, based on what Taufiq mentioned and what you have mentioned earlier, it's great, you know, for those who are experienced in the market, right, who has been trading for a number of years. But what about for someone who is new to US market? How should they equip themselves? What would be your advice on this, Kathlyn? Go ahead.
Yeah, I actually have a framework that I teach our students. It's called STPM, our Form 6 exam. Okay,
that's nice.
Of course, as a STPM, as a beginner, they will not understand all this, you know, macro economics or industry trends, and that's where I share with them the big picture first. So what they need to focus on is really start with the industry and stocks that they are familiar with. And there's a way for them to screen strong fundamental stock. They should always start with those that are already profitable and still have earnings growth, right? That's the safest part, because as long as the company make money, right, and he has growth, that means the valuation, the company value will increase over time, right? Then you just need to make sure that when you buy, it's not too expensive. They should not go into emerging stocks where, yeah, they may have a lot of sales, but they're not making money yet. Right, those are more for experienced trader, right? Like buying Amazon or Netflix when they have not make money, but now it's very good. It's very tempting to do that, but that is more for seasoned investor. They should go for like names like, let's say Microsoft, just an example, right? They are very established, they're monopoly almost, right? Strong cash flow, high return, and good earnings, right? And it's going to be lasting. If you look at the future, right, it's more likely this company is going to sustain, right? So these are the safer type of companies that they should start with. As they get more experience in the market, they understand more about all this, you know, macro stuff. It will take time, but it's really worth learning. It's not that difficult, right? Even when I start off, I don't have the guidance. I just pick it up over time. Yeah. So it's about whether you have the passion in that. That's how they should look at. But no matter how great the company names is, how good is the fundamentals, right? You must look at the stock chart. Right? That's why the first step is selecting the right stock. The T is for timing, right? So I encourage, at least you don't have to get so complicated for beginners. Just look at simple, it could be simple moving average for a start, or drawing the trend line. As long as the stock is trending down, right? You draw a trend line, don't buy it. Okay, because it can go lower and lower. Wait for the trend reversal. Of course, that they need to learn how to do that. And no matter how good is the stock, fundamental, how good is the timing, things can still go wrong. They must learn how to protect, right? They cannot put all their egg in one basket. You see, when I'm trading, I never risk more than 1% of my capital in any single trade. Yeah, 1%. It means when I hit my stop loss, it's only 1% risk. and no more than 5% concurrent market risk. Right, that's very, very important. Of course, even when I teach, not many people follow it, right? So it's really depend on the individual discipline. So that's the protection, right? STP for protection. And once they learn this, after some time, they can do the M, multiply. How you can increase your return faster. There are two ways to do this. One is through leverage, right? They can use options, CFD, futures. That depends on the experience, even stocks with margin. Another way is to more frequent trading, right? Instead of long-term investing, they can go for trend trading, right? They can ride the trend in and out. A few months, it's not very active as well. Or they can go for swing trading, right? In and out within 2 weeks. Or if they want to be more active over time, they can do intraday trading. I love intraday trading, right? So you buy and sell within the day, but it takes more experience. So there are actually not just one size to trade the market. So they really need to see who they are, right? Do they want to be more passive, right? They still have a full-time job, very busy. So they want to go for a more safe rate. They can even invest in ETF, right? If you buy QQQ, you make a lot of money in the last 10 years in the US market, right? Just QQQ, yeah. Like, so it, first of all, what is their objective? How much time they have? Which one suits them more? They want to be active. They want to be passive. Do they have a passion in this to master the skill? And if they have, then there's a lot of choice for them. Yeah, I hope that answered that. Yeah, STP, select, time, protect, and multiply.
All right. I hope audience took that, advice and apply it for the beginners. That's a select.
Time.
Key for technical, right? Or time.
Yeah, timing. Timing is using technical. There's two ways I time. One is valuation. Yeah, you can time. I time based on valuation and technical as well. Yeah.
All right.
Yeah, then protect and multiply. Yes.
Okay. Thank you, Kathlyn. Back to you, Taufiq. Okay, so Kathlyn has mentioned, that to look at all these things, but as an experienced fund manager, fundamental analysis, which Kathlyn touched a bit, on the ratios and everything as well. Fundamental analysis is key to search the best companies to invest. Any advice from you, Taufiq, for our retail audience on what would be the key areas for them to look at?
Okay, if you expect me to give you one single metric that is applicable across time, then I would say you will not get it for me. I think it's very important to understand what is meant by best, and that depends on the market cycle, like I said. So to answer your question, we need to appreciate that the current landscape is pretty much an inflationary environment, right? We have, like I mentioned to you in the past, you have the Fed who wants to have inflation for quite some time and to manage to tolerate moderate inflation for quite some time. So that means there will be bullish policies. Apart from that, I mean, the question is whether it is transitory or more permanent. If you look at CPI, consumer price inflation, yes, perhaps, the base effects will fade away. So that's why it's transitory. But I look at more sticky numbers, i.e. wage growth. And that suggests to me that the inflation environment will be a permanent feature as we ride out from this COVID pandemic. Second part that we need to appreciate is a change in the government in the US. We have, Trump administration who obsessed with wealth creation. And now under Biden, the government is pretty much obsessed with wealth distribution. And that policy itself is actually inflationary because the focus would be to increase the minimum wage, to make sure that, income tax rises, slower than capital gain tax. So that in itself is inflationary. And lastly, like I think Kathlyn mentioned, is that the focus, particularly on fiscal side, on the infrastructure spending, either because you want to digitalize your economy or you want to decarbonize your economy, that in itself is actually inflationary. So we have to appreciate the context of our investing strategy. Now, when you have an inflationary environment, so cash is punitive, right? So why do you invest? And which asset class do you invest? So you invest in equities and commodities because you want to ride on that growth story. You want to make sure that your earnings growth rises faster than the inflation, right? Unlike if you invest in credit or bond. So that is also a starting point. So if you know what you invest for, then you know what metrics to look for. So if you are investing purely because you want to have exposure to that growth, the single metric, if I would suggest, would be earnings yield. You look at the earnings yield of the company. That would be a best representation of the value that you get based on their growth trajectory. So I hope I answer your question, Kari.
Yes, you did. Thank you very much, Taufiq, on that one. Okay. Kathlyn, a very short one, but we're just wondering, I mean, you already mentioned just now you touched a bit on technical analysis, right? But please share, how can a new investor learn and use the technical analysis in their decision making?
Okay, there's definitely a lot of online resources, even when they do a Google search and YouTube video. The only cautions I have is do not get too complicated in technical analysis, because even when I started, right, I got very interested in it, and there are like 100 over indicators. And over time, I realized it's really what we call price action is the most important. And the shorter time frame you trade, the more important the price action. So what I mean is to keep it simple. Of course, I would suggest that you attend a proper training, right? Then you get the shortcut. Otherwise, when you search online, you get overwhelmed, right? You get with all these MACD, stochastic, spot, syntax, right? Which one do you use? And it can start with even simple, right? Just EMA. I like EMA for beginners. It's simple. Go for trend lines and support resistance for a start. Okay, just based on that, you see whether you can already look at a lot about the trend for the stocks. The rest of it is really understanding more on what to drive the future, because the chart is about the past. And I still focus on more fundamental and technical. I look at the strong fundamental stocks first, then only I look at the chart. But when I look for emerging stocks, I do it the other way around. Emerging stocks start to trend first before the fundamentals come in. Yeah. My advice is really to keep it simple. There are a lot of classes out there where they teach you 3 to 6 indicators, and you put all that on your chart, it becomes your candlestick is so small. Right? For me, is really the know the big trend, simple indicators, and then look at candlesticks. Right? It gives you more about the psychology of the market than anything else. Right? Yeah, and look at how do you know there's a warning sign of the market? Like there's 2 parts, right? So for more experienced people, they can look at how do you know there's a sector rotation? Is when the tech stocks and the S&P 500 doesn't behave the same, right? Then you know there's a sector rotation. Then for general market is how do you know your stocks is not behaving well? So you compare, let's say you're holding a stock A, so everything else is going up, your stock A is not moving. That's the first sign of warning. Then you check the news, anything is happening, right? So a lot of people they get rid, they don't want to sell the one they are losing, right? Yeah, so then they sell the one they are winning. They should be doing the other way around. Yeah, something is wrong with the one that is not in tandem. Yeah, so that's the part. Yeah, just simple tools. Don't get complicated on TA. Yeah, and of course, ideally you attend a proper class. You get a shortcut. It's such a big market, do you agree? The whole financial market. So it's not easy for beginners to figure out, and they end up paying a lot of tuition fee to the market. Yeah.
Okay, thank you, Kathlyn. Okay, well, without realizing it's almost half an hour.
Just one point to touch. I got a lot of this perception, right? Someone new to US market, which is a lot of fear. A lot of people have a lot of fear because they think that foreign is always risky. To me, risk comes from not knowing what they're doing. So the most important is get yourself educated, right? A lot of the US brand name is their day-to-day product that they use, right? I mean, like all these Apple, Microsoft, they do Google search, they use Facebook, they use what apps? It's nothing to fear about because you understand the product, even though it's foreign, right? So that's important. And a lot of people have perception, trade US market means cannot sleep. That's not true. You're an investor, you don't have to stay market open to market close. So I just want to demyth these 2 parts so that they are more comfortable to invest in the US market. Yeah, that's all I have. Thanks.
All right. Thanks, Kathlyn. Yeah, as I mentioned just now, I wish we can, continue this webinar. But for the audience, do look forward that we will have more of these free webinars, okay? But you have to download our app and become our client. Okay, Taufiq, I think we just want to take one question from the audience here. I think they've been very patient listening to us. The question for you, Taufiq, what is your opinion in reducing the interest rate to 0% in stimulating the economy by promoting loans and credits based on 0 interest rate? Here, Taufiq.
Okay, this is a normative question, right? It seems you want me to suggest whether it is a right policy or not right policy of anchoring the cost of capital near 0, whether that would lead to moral hazard, excessive risk-taking by the market players. If you ask me, like I said, you have to understand the difficulty that we are in. The recession that we experienced last year was not because of cyclical factors. It was outside the control. And that's not because we have excessive, what do you call it, like I said, risk-taking activities that led to, correction in unemployment. But it is more because, like I said, COVID-induced. So I would agree with the Fed's approach in having an outcome base and let the market overheat and adjust when you look at the capability of market and economy to respond to those structural changes, rather than, in other words, they are actually playing safe, playing caution on the side of, on the side of conservatism, rather than actually, the market believe that they are actually playing with fire. I think they would like to see whether the capacity of the economy is actually there to withstand the structural changes. I was spending some time over the weekend reading Mark Andreessen's memo. If you have the chance, look at his blog post. It's very interesting. He said that we are experiencing civilizational shift, brought about by the power of internet, but in terms of consequences, is far exceeding the importance of internet itself. We've seen work from home, the potential or the promising potential of mRNA. Never in history of human mankind we can come up with vaccine less than a year. So this is brought about by technological disruptions. So again, some would caution that, because of this, perhaps the inflation would be transitory, right? Because the net effect of this technological disruption is actually bringing down the cost of doing business. So again, like I said, I think the Fed, I agree with the policymaker here. If you want a normative answer to that question, they are actually playing safe.
All right, great. Thank you, Taufiq. Excellent answer. Okay, maybe we have one time for one question. This is for you, Kathlyn.
Mm-hmm.
How important is a currency impact when investing abroad?
Oh, yes. Okay. Yeah, I get this kind of questions quite often from my students as well. So this is the way I look at it. The most important is what is your objective? Right? Our objective for investing, let's say in the foreign markets, is to have the overall net gain. So as long as your investment can return more than the currency loss, then you're okay. Right? So don't be too worried about it. So yes, there are times where US dollar devalue. There are times where right now it's still on the low side. But if inflation pick up more sustainability, that means right now the Fed is always say like transitory, right? The inflation is transitory, like what Encik Toh said. It's just temporary because of the too much money supply, right? I mean, it's just temporary because of COVID-19. So the demand is more like accumulated, right? After that, it will stabilize. So it's just an assumption. So based on this, it may pick up again later on. So the key is. So I get it's a zone out time, right? So I want to make sure that I can cover the aspects. So if you don't mind, what was the question again? Sorry, I lost it for a while. Yeah.
Okay. Regarding the impact of foreign exchange to invest abroad.
Oh yeah. Sorry. Yeah, I lost track when I go to the Federal Reserve. Yeah. So so over time, right, the interest rate is likely to pick up as inflation pick up, like what Encik Toh is, right? Inflation is going to be here to stay. So with that, it will strengthen back the US dollar. Yeah, if they do tapering, if they reduce money supply, if they increase interest rate. So if you're investing in US, I don't think this is something you should worry. But even if it devalue, I don't think it's going to crash because US dollar is still the reserve currency. So if you look at the QQQ performance SPY, let me put on the low end. If you can get 20% return from the market, from just basic fundamental stocks, right? That's actually pretty reasonable, 20%. So we don't expect a 20% currency loss. If you have even a 5% currency loss, you still make 15%.
Net you still making 15%.
Yeah, because you're not going for like Zimbabwe currency, right? So that one you need to be scary. But so most important is you get about 20% gain per year. You net off a few percent currency loss, it is okay. Yeah. So as long as you don't put in your account and you leave it idle, right? Then you will have currency loss. You must invest in something. Yeah.
Great.
So I hope that addressed the question of currency.
Thank you, Kathlyn.
Personally, I do currency hedging when I see a risk, but I don't think it's for beginners. Yeah.
All right. Okay. Good. Wow. That's very interesting. Time just flies. On behalf of MIDF, Taufiq and Miss Kathlyn, thank you so much for the fascinating insights that you have shared. A big thank you to both of you. We truly appreciate you spend your time with us this morning to discuss about US market. Thank you again.
Okay, welcome. Thanks for inviting. Thank you, Encik.
Thank you. Bye.
Thank you.
Right. Thank you for that. Hope you still stay with us, ladies and gentlemen. Let's now focus our attention to the man of the hour, yang berbahagia, Datuk Sharon Wardani, Group Managing Director of MIDF, to officially launch MIDF Invest. To you, Datuk.
Thank you. Thank you. I'm not quite the man of the hour. I think you are. This is your baby, but congratulations. But thank you. Assalamualaikum warahmatullahi wabarakatuh, and good morning, ladies and gentlemen. Thank you for taking the time to attend our virtual launch this morning. And thank you to our guest speakers, Ms. Kathlyn Toh, founder of Beyond Insights Investment and Trading Education, and Encik Taufiq Iskandar, CIO Penjana Kapital, for the excellent discussion and for encapsulating the reasons why we think the investing public needs to invest overseas and how MIDF Invest fulfills this need. I mean, honestly, that discussion was scintillating, and if I had any doubts about investing in the US, it dispelled them, and I want to invest even more in the US markets. But I'm thrilled to be able to announce today the launch of MIDF Invest, an online investment platform that gives Malaysians direct and secure access to stocks and ETFs listed on the New York Stock Exchange and NASDAQ at very competitive rates. The mobile app is now available on the Apple App Store and the Android Play Store. Just look for MIDF Invest. In recent years, Malaysian investors, both fund managers and individuals, have become more sophisticated and knowledgeable, as you can see from our panel. And we have seen a growing interest in investing in other markets, particularly into the US stock markets. This is driven by the need to diversify one's portfolio, as well as the attractions of the high returns of the US markets, driven in part by the performance of technology companies such as Facebook, Amazon, Apple, Alphabet, and Netflix, which are all by now household names. We created this app because we believe that investing overseas should be made available and affordable for all. And through this app, we provide a safe environment to do so, since we are supervised by Malaysian regulators. MIDF Invest is an easy-to-use app that provides tutorials and research for the novice, charting and other powerful trading tools for the advanced user, and simplifies fund transfers to and from the investor's Malaysian bank account. Users can open an Islamic account and invest in the large universe of Sharia-compliant shares, such as Apple, Alphabet, Facebook, and Tesla, and ETFs listed on the New York Stock Exchange and NASDAQ. We have a customer support team of happiness agents who will work round the clock to ensure the happiness of our customers. MIDF will continue to add more features and investment products to MIDF Invest, and we will be making it available on desktops and tablets too. I urge you to try the app now. There is a demo mode where you can try the app first with pretend money and learn how to buy and sell shares and ETFs. And once you are confident, you can register as a user and start using real money. You need to do this soon though, as I'm also delighted to announce that from today, the 6th of July to 31st of July, 2021, New York time, MIDF Invest will offer free brokerage for all trades under $1,000 US. Thank you, ladies and gentlemen, for being here this morning. It is my honor to now officially launch MIDF Invest. Wassalam.
Thank you, Dato'. I think we're going to play a video now. Please wait for a while.
Are your savings stagnant no matter how hard you work? Make money work for you with MIDF Invest, an easier, safer way to grow your wealth by investing in stocks and ETFs from over 6,000 US companies. Registration is simple and completely online, with an approval process of just 10 minutes. The bank is regulated by Securities Commission for your peace of mind, so you can keep your money safe while keeping it busy. Want to earn from some of the world's biggest companies? Let your money work abroad. With MIDF Invest, you can invest in stocks and ETFs from over 6,000 US companies, including a wide range of Sharia-compliant stocks. Have questions? You can talk to our experienced happiness agents anytime. So, if your savings are still sleeping on the job, it's time to make them work a little harder.
Okay. Next, let's watch the next video. It's a short video showing the features of our new app, MIDF Invest. Some of the key features on the app is 100% online onboarding. Islamic account option is available. You can easily transfer your money with a zero fees. Like Datuk mentioned just now, there's a 24/7 customer happiness available, and over 6,000 stocks, like mentioned in the video as well. And yeah, just to reiterate, we have a zero brokerage fee until 31st of July 2021. Terms and conditions apply. We shall play the next video now.
Hi, let me show you how easy it is to buy a stock from the MIDF Invest app. To start, download the MIDF app from the Play Store or the App Store. Registering your account with us will be very easy and it will only take a mere 10 minutes. Once your account is approved, you can click the trade button to begin your investment journey. Search for the stock that you like to buy, customize your stock buying options, tap on the place order button, and finally tap the confirm button. And congratulations, you have purchased your first stock on the MIDF Invest app.
Right, thank you. Distinguished guests, with that video, the ceremony has come to an end. Once again, we would like to thank each and every one of you for gracing our virtual launch ceremony today with your presence, and we do hope to see all of you again next time. Before you go, don't forget to download the MIDF Invest app from the Apple App Store or Google Play Store right now and start exploring your stock options as your life is about to be changed completely. Take care, everyone, and stay safe. For the members of the media, please remain online as we will begin our Q&A session shortly. Thank you very much again. I would like to request for non-media participants to leave the webinar as we have come to an end, and we shall start our media Q&A very soon. Thank you very much. We appreciate your support. Thank you.
Okay. Okay, hi. Good afternoon. My name is Irma Muhammad from MIDF, and I will be coordinating today's Q&A. I'd like to thank our media friends once again for attending our event today and for staying on for this session. It is my pleasure to introduce this fine gentleman to you once again. We have Encik Khairi Sharin Baki, Head of Digitalization MIDF. Welcome, Encik Ahmad Farouk Mohammed, Head Group Managing Director's Office, MIDF. And of course, Datuk Sharon Wardini bin Mauzani, GMD, MIDF. Before we open the floor, I would like to inform our media friends that there are two ways. Oh, I'm sorry. Welcome to Datuk Dominic Silva, CEO, MIDF Amanah Investment Bank. Thank you for joining us, Datuk. Before we open the floor again, I would like to inform our media friends that there are two ways for you to communicate your questions. The first one is by using the raise your hand feature. Our IT guy will unmute your mic so you can speak out your questions directly, or you can also type in your questions using the Q&A box at the bottom. I will read it out to this gentleman for them to answer. Just a gentle reminder for everyone to kindly introduce yourself. Please state your name and also the publication that you represent, because so that we can address you properly, and also because we can't see you at the moment. Ladies and gentlemen, without further ado, let's kick off the Q&A session by listening to a few words from Encik Khairi Sharin regarding the apps and today's event. The floor is yours, Encik Khairi.
Thank you very much, Irma. We had a very interesting session earlier with Encik Taufiq from Penjana Kapital, as well as with Kathlyn Toh from Beyond Insights. Just in case if any of the media here, didn't listen from 11 o'clock, I'm just going to recap a bit about what we discussed. So we discussed about US market, and it's a very interesting market. It's been up so much in the past year, but based on the discussion with our panelists, they still feel that that there's still upside to it. With 0% interest, with the inflationary play, and then if you look at the tech names, you look at the semicons names, it's a multi-year growth stories there, where there's short of supply, very strong demand on semicons, for example. When you talk about tech, you talk about e-commerce, you talk about Zoom, for example, all these tech enablers for us, during this pandemic time, or in the past 2 years, how things have changed our lives. So in short, the panelists do agree that US market still very much the place to go, with different sectors to look at, and with the attractiveness, with the accessibility. In short, I can just summarize, during our session that both panelists do agree that it is still a buy on the US market. Thank you very much, Irma.
Thank you for the insights, Encik Khairi. Members of the media, I am now opening the floor for questions. I will take one from the Q&A box right now. The first one is from Kartika Harian Metro. The question is it appropriate in the current pandemic situation to invest in the stock market?
Okay, I think I'll take the question. Yeah, like I mentioned earlier, during this pandemic, the prices of certain companies has been doing so well. I mentioned Zoom just now. I mentioned the likes of Amazon, when it comes to e-commerce, Shopify, for example, all these names, even the likes of Netflix and Walt Disney, for that matter, right? Even though we are in the pandemic, I think we need to look. There are names out there that, because of the situation we are in, that there are names that has been doing very, very well, and because of people have to work from home, there's huge demand for laptops, for example. There's huge demands for other electronic devices, for example, hence the shortages of semiconductors in that matter. So the semiconductors, or even the graphic cards players for gaming and all these names has been doing very, very well. So yeah, to answer, it is still an appropriate time to invest in the stock market at this moment. Thank you.
Anybody would like to anything before I go to the next question?
Yeah, no, if I can add, it's always good to invest at any time in your stage of life, because you can't just leave the money sitting idle in your current account. If you have extra funds, always invest.
Thank you, Dato. The next question is from Niam Bernama. A few questions. One, how many MIDF Invest accounts are you targeting to be opened by year end?
Perhaps Khairi and Farouk will answer those questions. We set them very strict KPIs, but I'll see what Khairi and Farouk will announce.
Thanks for that. I'll take this question. So definitely we have targets in terms of number of subscribers and targets in terms of revenue for this product. And so these are now my KPIs and also KPIs for Cik Khairi as well. But definitely I think what we want to focus on really is the quality of the product and making sure that by the end of the year, as you said, rather than just focusing on numbers, by the end of the year we want to achieve something like we can say that MIDF Invest is now the investment product of choice to the consumers out there. So that whenever if someone is thinking about investments or online stockbroking, then immediately MIDF comes to mind.
Okay, shall we go to the next question? From Hazwan Berita Harian, berapakah brokerage fee selepas promosi zero brokerage fee tamat selepas 31 Julai ini?
Cik Khairi, saya rasa Cik Khairi boleh jawab soalan.
Okay. All right. We will announce that later. Okay. What we want the users to do now is to download and then use our app for the next 3 to 4 weeks by the end of July. But definitely we will inform that probably maybe a week or a few days before the end of 31st July. Thank you.
We will always be competitive. Very competitive.
That's true.
Ada perancangan untuk meluaskan lagi senarai exchange yang boleh pelabur akses pada masa akan datang selain New York Stock Exchange dan Nasdaq?
Yes, Cik Khairi jawab.
Okay. Yes, definitely. It's in the plan. In fact, the reason why we just choose US market, because first of all, is the right market is the ones that people has been investing the most. But it is in the plan for us to expand beyond New York Stock Exchange and Nasdaq. So just watch the news flows within the next hopefully 3 to 12 months. We will add more markets into our app, inshallah.
Thank you. The next question is from Intan Zaino The Star. Why US market and how about the forex risk?
Okay, I think the question was also asked of Ms. Kathlyn just now when she was during the seminar. She put it very well. What you have to look is your total return. If you make 20% by investing in Nasdaq index, even if you lose a few percent on the foreign exchange, you're still ahead. So look at it from a total return point of view. Don't just concentrate on one or the other. Sometimes you can make money in forex, sometimes you might lose money in forex. But if you've invested properly in the right company, in the right stocks, then you should be doing well. I don't know if Dr. Dominic has anything more to add to that.
I think you've covered it, Dr. Charan. It is true. And I think, even if you keep all your savings in ringgit, you are taking a forex risk, because if you've got requirements for foreign currency and you hold all your investments and your savings in ringgit, you are actually taking. So what we are suggesting is a better way for you to have a hold of your savings and your investment.
Thank you, Dato. Next, we'll take a question from Mr. Brian Fernandez from BizTech. He has raised his hand. Brian?
Hi, gentlemen. First of all, congratulations for launching the product. But the reality is, I've downloaded it and I've used it. It's very intuitive, easy to use. The challenge is that the tech is the easiest part of the launch. You're late in the game. How are you going to distinguish yourself from the rest of the players? Because you've got the likes of everyone's already trading on anything from Tiger to FSM1, or even using stuff like Robinhood. What's the go-to-market strategy in terms of marketing?
Great question. Perhaps I'll ask Farouk and Khairi to answer first. Khairi and Farouk to answer first.
Thanks, Sector. So, Brian, I think one of the unique things about this product is that it's launched by MIDF Amanah Investment Bank, which is licensed by the Securities Commission. In order to get this product up, we had to jump through a number of hoops set by both Bank Negara and the Securities Commission as well, just to make sure that in terms of the security of the product, from EKYC and the cloud storage and so on. So I think that's one thing that Malaysian investors will have that peace of mind, that this is a product regulated by a Malaysian regulator, and if something were to happen, you know where to find us. I think this is the key differentiator between us and the other apps that you mentioned out there. Of course, definitely they have come earlier. They are already very famous and very well established. But that's the difference between MIDF Invest and others. But other than that, also I believe that as MIDF we continue to expand our product range, I think you start to see that there are more features to be added to this app, which will certainly help you to conduct more and more financial transactions. So it won't just be focused purely on stockbroking, but hopefully over time we'll have other features, other benefits for you as well.
If I may add to what Farouk just said, one thing, you're taking a risk of using the unregulated apps, the unregulated by SC. We're talking about those apps outside of Malaysia. Of course, another thing is that these apps are, very, very generic in the sense that it's just available out there to everybody. But here we are talking from the point of view of Malaysians, right? We are here very close to the Malaysian investors, and as you know, this app is for Malaysians. So we are hearing, more on the ground. When we're gonna do more of these weekly webinars and classes and tutorials and all, we will hear more from the ground. What is it that they want? What is it that they are looking at, right? So I don't think those big names out there want to listen to what Malaysians are interested in everything. And on top of that, we mentioned about our customer happiness 24/7 service, which is I believe it is really good. It's not a chatbot; it's real human behind it. Okay, so you can test and have a chat with our happiness agents. Okay, which is we as you know, we also have tested some of the foreign ones. They do not have this. In fact, the response are very, very late from some of these guys. But for us, it's very spot on. Within minutes, or sometimes within seconds, our happiness agents will be available to assist Malaysians. And like Farouk said, we are here. We are in Malaysia. This is us doing it for Malaysians. So the features will be based on what are the Malaysians would like to have going forward. Thank you.
Okay.
Yeah, just one final thing to add to that. It always amazes me. It's one thing to order some books online from America, but to send your life savings to a website regulated by some other country seems a very brave thing to do. Much better to send it to a local bank where you know where your money is. And of course, in terms of features, we have our features are as good as anybody else, if not better than most. And yeah, so and our charges will be very competitive, I promise.
Oh, sorry, if I can add, what differentiates ourselves is that none of those apps, right? They have offer Islamic account options, by the way. none of the global players. In fact, within the local players, I think there's only one probably. I'm not going to say the name, but other than that, we were the only one who's actually offering Islamic account as an option for them to invest in US market. Thank you.
Thank you. The next question is from Go Asia Asset Management. First question. It takes 10 minutes to register for an account, but how long does it usually take for an account to be approved?
Great question, Cik Ari.
Okay, yeah. Thank you, Go. Yeah, it takes about 10 minutes to register. In fact, of course, internally, we tested out. I think within 5 minutes, some of it accounts been approved. So approved, as in say, within 5 to 10 minutes. This is depends, on the situation, because each individuals are being evaluate, their risk differently. Okay, we have our EKYC behind the scene, evaluating all these things for different individuals. So depends on the answers. Depends on what you declare. Some can take, as I say, as fast as 5 to 10 minutes. Actually, we've tested that. But of course, for for the likes of those high risk, the PEPs, we do take a bit longer, because what will happen is that even though you finish the whole onboarding process, we will have to ask for additional documents. This is because, as mentioned, we are regulated, so we do have to follow whatever the regulators ask from us. So yeah, so the answer is differs as fast as 5 to 10 minutes, but it can also take up to 24 hours, or depends how fast we get those documents and to be processed. Thank you.
Thank you.
But so far, for most people, Carrie, it's taken shorter rather than longer, right? For
Yes, that's correct.
Majority.
Yeah. Correct. Yeah. For most majority, you don't have any issues with the EKYC. You're not high risk. Yeah, it can be approved very fast.
Next question is from June the Sunbees. Does the app have a virtual account for traders to experience before starting to trade with their money? What are the ways to deposit and withdraw traders' money? Cik Khairi?
Maybe Farouk can answer this. Yeah.
Farouk, sure.
So June, thanks for the question. Yes, as Dr. Chan mentioned earlier, we have a demo version. So once you download the app onto your phone, there are instructions, very, very clear instructions on how to enter into the demo site. So of course, playing the demo will give you $100,000 something, a nice amount to start with. And you can just play with the app, learn how to press the buttons and draw charts and so on and so forth. Then once, of course, you're ready to use real money, then you can graduate up into the live account. And after that, transferring money from your existing bank accounts to the app and withdrawing money out as well. It's I wouldn't say it's a swipe, but I mean it's a very easy process. Very easy process, and all of this is backed by the current payment systems that are used by all banks in Malaysia currently. So it's very easy and very secure.
Yeah. So in other words, if you use your bank account to pay your bills electronically, it's not that much more difficult to. Same process to transfer money to the app.
Yes.
From Suraya Zainuddin, she would love to know fees involved with using MIDF Invest as well as exchange rate.
Go ahead, Farouk.
So as mentioned, for this period from the 6th of July until the end of this month, 31st of July, we will not be charging any brokerage fees. Subsequent to that, of course, then we will go back into our normal fee structure, but this will be very competitive compared to what other brokerages are charging right now. In terms of Forex also, I think we have managed to come to an arrangement such that the foreign exchange rates that you have to, that you get, the foreign exchange rates that you get here.
So for you got to move you.
So the forex rates are as competitive as competitive as what you see on other websites.
If I may add on that, if you use some of the foreign apps, there's actually a transfer fees involved as well, right? Whereas for us is from your ringgit account transfer to our account in ringgit, and only on our app you convert it to US dollars. So there are no fees involved on that part as well. Thank you.
Okay. And I think this will be the last questions for today. I think it's a proper questions for everybody here. What Terence from Rise, what is MIDF strength and stand now, and how will they grow going forward?
What is our strength?
MIDF strength and stand now, and how will they grow going forward?
Gosh, that's a big question. Maybe we'll all take it in turn to answer. So we should start with Dr. Dominic and move to Farouk and Khairi.
Now that's a great question, which is probing as to the future of MIDF and the group. I think one of the things that we cannot move away from is the macro trends. And the macro trend suggests consumption of products digitally, fulfilled technologically in an easy way. And I think that is an area which we will be seeking to focus on in terms of delivery and fulfillment of our products. That's a broad answer. Of course, there are some things that we cannot do digitally, like offering client M&A advice and so forth. But wherever possible, it will be digitally led and fulfilled.
Dr. Sharan?
No, this is like Farouk and Khairi.
So I think it's very interesting question. So because it starts off from what our MIDF strengths, and I think I like to think that MIDF has built a very strong base over the last 60 years of our history in the SME space, and definitely with where the country is currently, the SMEs will require a lot of attention going forward. So I think MIDF will be focusing on SMEs and also corporates, and that is from our development finance business and also investment banking led by Dr. Dominic. But as Dr. Dominic says, so we will try to reach out to this customer market segment using digital and also other traditional channels. I mean, it's very interesting times, and we will definitely be growing stronger from this. Khairi?
If I can echo that as well. I think, being medium size in that sense, we are very agile, we're very nimble, we can move fast, very fast as compared to the incumbents out there. For example, like this app itself, we move very fast, and we build our team, and for us to build this whole platform. And mind you that this online broking is just our first product on this platform. All right, it's not the only product for us. There will be other investment products as well. Hence we call it MIDF Invest. So yeah, the strength is that we have a very strong and a small team to move ahead. And unlike the incumbents where they have all the branches, the traditional styles of for example, in this case, stockbroking, right? Some of them have like 50, 60 branches. So we don't have all those things. So we can move very fast, offer everything digital. Even you will see our marketing will be very much digital focused and everything. So yeah, I think that will be the strength and the key where we will move forward. To you, Dr. Sharan.
Thank you. Great question. MIDF was started in 1960 as a result of a World Bank study, which said, how can Malaya, it wasn't even Malaysia yet, how can Malaya develop? And the World Bank said, you need to set up a development bank to finance industry and get Malaysia industrialized. So we were born just before the creation of Malaysia as a country, and a time when the country needed new ideas, because we were an agricultural colony really of the British, and we had to change ourselves very quickly to join the world. So MIDF is now today, 61 years later, and a similar turning point of the national economy. Not just the national economy, actually the global economy. The pandemic has wreaked havoc. All ways of doing things have been re-examined. We've all gone digital in a way inconceivable in the past. People are working from home. I cannot believe that we are now, 80% of MIDF staff are working from home, but the bank functions. We serve our customers just as well as we did before, yet we don't have to do it in the office. Someone told me this, 2 years ago. It said I would have laughed in their face, but yet we've done it. So we've come at this incredible turning point in our economy and the way we do business. And I don't know, it's time for MIDF to step up again with the change in the economy. And I think we have a great chance of doing so. Digital has changed the way of doing business for everyone. And although we aren't the biggest bank in terms of the number of branches or the number of people, with digital we can provide things which some of the others, even the big ones, aren't able to provide. So future's great. Future's very good for us, and future's looking good. And this is and I'd just like again to congratulate everybody from MIDF involved, Khairi and his team, Farouk and his team, Dominic's team. We had everybody involved, from people in operations to everybody. I won't start to name everyone, and it's been tremendous. We've got this thing online, and it's an excellent product, I think. My humble opinion, it is an excellent product, and it's going to be first of many. And I really hope to see many of you sign up and invest and take advantage of this free offer. It's not often that you get something free from the bank, and this is a truly free thing from the bank. So take it, grab it while you can, and invest and take charge of your own destiny. Don't just leave your money lying around in a current account. Invest, invest, invest. Thank you.
Thank you, Dato' Sharon. We will now conclude our Q&A session. Thank you again, Dato' Sharon, Dato' Dom, Encik Farouk, and Encik Khairi. And to our media friends, our sincere appreciation and gratitude for spending your time today with us. If you need further assistance, you may reach to me. We will get back to you as soon as possible. Thank you. Have a great week ahead. Assalamualaikum. Stay safe, everybody.
Thank you. Bye.